The U.S. dollar is off to a slow start today. The euro versus U.S. dollar, dollar versus yen have ranges that are about 35 to 40% of their what is normal. The pound versus U.S. dollar is a little bit seeing a little bit more action and moving to the upside. We'll talk about the technicals that are driving these currency pairs to start your new trading week as the U.S. traders enter for the day. Let's get started. Kind of a sleepy news weekend. The Pope was put to rest, and a lot of the leaders were overseas. Ukraine, Zelensky, and President Trump did speak at the Pope's funeral for 15 minutes, made some progress. So there is a hope for peace going on there. So we'll see how all that geopolitical risk plays out. As far as the dollar goes, the dollar is a little changed in trading here today. I'll start by taking a look at the euro versus U.S. dollar from a technical perspective, see where we stand in regard to that view. So if you look at the hourly chart, what we ended the week last week was the market trying to hold below moving average levels. This is the 200-hour moving average, a green line in the chart. You can see the number of different times the market came up toward that level and found willing sellers on both Thursday and Friday. Friday's trade here today, the 100-hour moving average broke below the 200-hour moving average, and that became the first order of resistance. And indeed, when the price moved higher in the early European session, late Asian Pacific session, where did sellers lean against? They leaned against the 100-hour moving average. Risk can be defined and limited against that level. If the price moved above the 200-hour moving average, then the trade would probably be off. So there's a low risk trading opportunity against that moving average to start off the trading week, and traders took advantage of it. The price did move down off of that level, but we did hold above what I was looking for as support. The next support coming between 1.1307 or near the 1.1307 level. As you can see in trading on Friday, the price didn't quite get to that level, fell short of it by about 5 or 6 pips. This day on Wednesday and into early Thursday, the price low did hold that level not once but twice. So early buyers against that level kept the bid in the market moving up toward the 200-hour moving average, and trading here today moved up to the 100-hour moving average. So if the price is going to go lower, we need to get below that level, and then we start to look toward the 1.1273 area. And then the 38.2% retracement. What's the importance of the 1.1273 area? For that, we need to go to the daily chart, and we take a look at the daily chart and take a look at this high price right here. This high price came in at 1.1275. This is the 2023 high price. Keep that in mind. And also the 61.8% retracement of the move down from the 2020 high to the 2022 low comes in right around that level, 1.12709. So that's the importance of the 73-ish type area off of the hourly chart that I have outlined right through here. So be aware of that, why that is so important. And again, below that, we look toward the 38.2% retracement. Let's take a look at the dollar versus yen next. And if we look at this from the hourly perspective, we can see how it too has seen just up and down trading in a fairly narrow trading range. The average trading range, by the way, for the dollar versus yen over the last 21 trading days, which is about a month of trading, is 200 pips. I think the range today is only 60 pips, so that's about 35 or 7% of what is normal, maybe a little less than that. So be aware that there's room to roam in the dollar versus yen, and I've outlined a little bit of a yellow area there. That yellow area is just off of things like this high right here and this high right here. We did try to break above it, and then found that area as a willing sellers for the most part at 143.83. So we're going to need to get above that 143.83 and ultimately above the 38.2% retracement of this trend move to the downside. I took the price in the end of March from 151 all the way down to 139 in a relatively short amount of time. So getting above the 38.2% retracement at 144.208 is the minimum that the buyers would have to get above in order to show that they mean business, is how I like to say it, that they want to take back control. If you can't get above 38.2% retracement, this is just a plain correction in what is a more bearish market, and we'd expect further downside momentum. That downside momentum would have traders looking toward the 100-hour moving average down here. If we're able to break below, let's say, these lows right through here, you can see that today's lows came up short of Friday's corrective low, probably near the 143.24-ish type level, give or take. So get below that level and then look toward the rising 100-hour moving average would be the next key target on the downside for the dollar versus yen. So the technical levels are pretty well defined for that currency pair. First move, get above the 143.83, and then get above the 38.2% retracement on the downside. Move below the low prices from Friday, around the 24 level, and then look toward the 100-hour moving average. Finally, let's take a look at the sterling versus US dollar. And again, we'll look at the hourly chart. And you can see that this currency pair is trying to extend. We actually moved above the high prices toward the end of last week, toward Thursday's trade. As a matter of fact, you can see how the market extended above that level. But we've since rotated back to below that level without getting up to the next target area, which I defined as the low off this consolidation near the high prices that we saw in trading last week, and I guess that's all last week, where the that level comes in at 133.62. So moving higher, but found resistance sellers against the old a swing area. From last week's trading, we need to get above that 133.62 level in order to push the price more to the upside. Have traders looking toward the double top that occurred last week near 1.3423. On the downside, it's clear that the 100 and 200-hour moving averages are starting to converge here near the 132-ish type area. And if the price were to move below 132, a nice natural level, I would think that the price, despite the fact that we had all these failures on the breaks of the lower 200-hour moving average last week, but if we get below both of those levels, I think we'd see further selling pressure in the sterling versus US dollar. So watch 132 level for that currency pair. So there you have it, a look at the three major currency pairs to kickstart your trading day and the new trading week. My name is Greg McCloskey. Good fortune with your trading. Bye-bye now.